You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with the old option block all-stars. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network of this here fine show, the Option Block. And you can find it pretty much anywhere you like. You can get it on all the big platforms. You can get it on our mobile app, get it on the website. You can even get it live if you are so inclined every Monday and Thursday. So clear your schedule. Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. Grab that Mixler link, and you too can join in the live party that is the option block. Never know what the heck we're going to talk about. Could be Bitcoin, could be VIX, could be a whole bunch of UA, could be some other weird stuff, lighten it up. Whole bunch of your questions. That's another good thing. If you're in the live thing, you get to jump to the front of the queue when it comes to questions. So if you got those percolating in your brain, then that may be a fun way for you to go. And of course, however you listen, if you can't make it live, that's okay. We allow it. But to make sure, if you do have questions, hit us up there or via social media or via the website or email, because we do on occasion like to hear from you guys. And joining me on the old program today, let's go. You know, it's funny, we just beamed out to New Hampshire about an hour ago. Let's go now just a wee bit farther north to what we call the area of the U.S. Colloquially known as Canada adjacent. Where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from Option Pit. Mr. G, welcome back to the show. How does it feel to be Canada's smallest neighbor to the east there?
Canada.
Yep.
Oh, I tell you, just the hits keep coming. My gosh.
So I'm insulting not just Mainers.
I don't even know why I do this show.
Not just Mainers, but Canadians. Equal insults to all there. Canada, I like that.
Canada. All I know is life is chilly today in Canada, but not too bad. But what were you doing in New Hampshire anyway? New Hampshire.
We were beaming into the ORATS folks, talking all things advisors and options about an hour ago. So yes,
he's still there. I'm surprised he's not in Brazil or somewhere else by now, because he sort of travels the globe. But one of these days I have to visit him. Maybe he'll come and skate on my ice rink soon, and you can get secondhand knowledge of the existence.
How goes? I haven't gotten an updated photo in a while. How goes the last year was a bit of a mud puddle. Has it turned out better this year?
It's definitely better this year. We could use Mother Nature has to help us and give me a little bit more water, because it's basically the size of a big swimming pool. So it is frozen. We just could use a little more water. We got weird weather pattern this weekend. So after this, I'm just going to finish flooding it and see what we get.
And then not joining us from Canada, but from parts out west, we are joined, I believe, by the mostly sane and sentient, once again, Uncle Mike Tosaw. He made the mistake, listeners, of beaming in to us last week when I was struck down with the plague. And, this plague is so nasty that it can even cross the broadcast waves. And it went and struck him down this week as well. Thankfully, he seems to be in recovery mode for the most part. Uncle Mike there, are you sane and are you lucid? And how go things, Uncle Mike?
Well, I don't know. I might be recovered, but I doubt my sanity's ever going to be in existence ever. I don't know if I've ever been sane from the first place. Like the old adage, of all the things I've ever lost, I missed my mind the most.
Yes, I could probably commensurate with you, or commiserate, I should say commensurate. I'm all full of fun words today, but let's get rolling with all things Canadian, because it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what was trading. A bit of a quiet one today. Most of the major indices kind of closing split on the day. The NASDAQ closing off closing almost literally unched off point. Actually, it's showing 0.00 on my screen right now. So it is just ticked up 0.01. So flickering around the unched level. Gripping entertainment there to watch there, listeners. The S&P and the Dow ending up the day up slightly. VIX cash taking a little bit of a relaxer off about a tenth of a handle or so, but still in the mid 9 range, and about 963 or so wrapping up the day here. So interesting kind of we're coming into next week, of course, will be a truncated holiday week. So we're coming into that in a wee bit, and maybe some people already heading to greener pastures. Perhaps they're taking a trip to Canada, even though they're past leaf peeping season. Now they have to go for the skiing and snowshoeing season, it sounds like, up there. So, Mr. Rocklobster, if I were to head your way, and I was not interested in skiing and snowshoeing, instead I was interested in all things VIX and markets, what would I see, sir?
You would see, from the vantage point of Canada, I think we're doing a little bit of wait, a little bit of worry about government shutdown. But we had a day where, the SPX was up a little bit. I mean, how much more good news can the market absorb? It's already, I think we're at another all-time high today, or we're darn close to it. So VIX was it's the holiday. We're basically have a week off. It's hard for VIX to go lower than it is at this point. Although we did have what I believe you guys will probably talk on your show tomorrow. I believe we had a historic settle for VIX yesterday, 875. So that was a surprise. VIX actually settled in the 8 handle, which you have to give the greasy meatball some props for managing our positions well too during that. So. But anyway, that's for the fun anyway. So, but we have actually what things are is it's very normal vol conditions, I would say, for VIX that's 968 at the bottom of the scale. There is not a lot out here. A lot for whatever reason. The investors love the market. Stocks are going up. That means vol is low. And the only thing I would say, there's a little bit of a disconnect between, and it's funny to hear this, but volatility in oils, commodities, minerals, stuff like that, super low. Volatility in technology, even, the Intels and the Microsofts of the world, a little higher than normal as far as option vol. So the market seems to be kind of betting on, or they're just more active buyers of juice in big technology. And as far as, we used to remember just a couple of years ago when oil with prices were crashing and everybody was worried. Oil vol is about as low as it's been in, I think, for at least the last 5 or 6 years. So you have a strange disconnect in all that. So you've got higher tech vol, lower kind of commodity oil mineral vol, and you have a VIX at 967, and sort of the futures are a little juicy, but no more juicy than normal, considering VIX is where it is. So there's not a great expectation for vol going higher. Let's put it that way, at least for right now.
No, we were just talking about that on our advisor show with your buddy from Orats there, and about what we're seeing out there in the options, and how it doesn't seem to be pricing in a massive return to a 40 VIX anytime soon in 2018. But we shall save all of that conversation for volatility views tomorrow. Instead, Mr. Uncle Mike, sir, as you're enjoying your warm tea and crackers, what was catching your eye there, sir, on the old markets?
Slippery stuff, oil. Actually, I shouldn't say oil, but I would just say the energy stocks. Of all the sectors of the that are out there today, energy is the big mover, which it's rather ironic in that we didn't have a large move in oil or natural gas today, but we did have over a 2% move in XLE. That's definitely the main mover of this marketplace. Everything else was either flat. Financials had a decent sized move today, so I shouldn't say that. Financials were up roughly 0.8% on the day. And then we had consumer discretionaries up a little bit as well. But really, the main thing that I'm seeing on my screen is the slippery stuff, black gold, Texas tea. Of course, a lot of the oil stocks are up. Chevron's up. So that's the main thing that I'm seeing on my screen that's really moving the market at this point in time. Overall, just some other things just of note. Apple is up a couple pennies on the day, up 66 cents. Gold and silver are roughly flat on the day. Silver's down 3 pennies. Gold's up 17 cents. So really nothing too crazy along those lines. But overall, the main thing that I am seeing that's really lighting up my tape is the energy.
Yes, energy. I think you spent too much time on TWIFO last week, sir. You got energy on the brain. Again, we'll be talking about that probably more tomorrow over there on This Week in Futures Options. You know, it is nice. Feels like a bit of a throwback. You know, the cycle seems like it's mostly done, but there are still some names popping off from an earnings perspective. We got a fairly big one after the bell today. Good old Nike. So yeah, there are still some names on the old docket. Nike, of course, ticker symbol NKE, closing today. Where'd it close? About 64.77 or so, up about a little over $1, so nearly 2% on the day. So they had a decent intraday move. Maybe some of that going to be reflecting some of the earnings excitement. They're pricing in close to $3.50, so right around 5%. And here in the after hours, they still seem to be digesting the number, because it's pretty much off about a dime or so in the after hours. So I don't think they've really made up their mind on what that is. Either that, or this is going to be one of the more successful premium sales in quite some time. But I don't think that is going to be the case. But we'll keep an eye on this throughout the show, though. We'll let you know if there's anything else percolating under the wrapper. You know, what is the case, though? And we were kind of just talking about this on the advisor's option, worth kind of bringing up here as well. You know, we are coming towards the end of 2017, so it is natural to start looking in the old rearview mirror at the year that was. And when you think of 2017, you pretty much think of the year that wasn't from a volatility perspective. You know, we said many times, only half jokingly, that if anyone came on the network in the beginning of January and was talking about what we ended up seeing, which was just a complete dearth of volatility, we would have laughed them off the air. It would have sounded ridiculous. And if they also had followed it up with, but it would still be a banner year for things like VIX options and VIX futures and everything else, and the options market wouldn't do too terribly, even with that anemic volatility, we would have laughed them off twice as hard. And yet that's pretty much exactly what we saw. It's just been a crazy year. 61 or so new record highs in the S&P since January. That might even be dated at this point. That's a couple weeks old, I believe. Up more than 20% for the year. That number, by the way, is new highs, third most since 1952. And also, the FT did an interesting analysis a few weeks ago of, you break down market volatility a lot of different ways. Obviously, the VIX is one. There's realized volatility. You can just talk about how much net movement you see out there in the S&P. A pretty simple, basic way to go, and that's exactly what FT did. They looked at the S&P and went all the way back to 1927, analyzing pretty much just how much the S&P moved any given day. And since Election Day this year, or actually since Election Day last year, obviously, so pretty much this last calendar year, it's been the S&P has averaged 0.31% moving every day. So that's the lowest they saw in their data in over 50 years. In fact, you got to go all the way back to the year immediately following the assassination of JFK. That's how far back you have to go. And you wouldn't think off the top of your head that would be a very quiet year. You think that would be very tumultuous. Yep. The 12 months after the assassination of JFK, that's where we saw an average daily movement of only 0.25%. It's the last time we saw anything even approaching these levels. And pretty much over the last half of a century, we've seen it moving an average of 0.72% a day. So pretty much more than double what we saw this year. So just crazy stuff across the board. Also, when you're talking returns, the index up over 20% this year, and also low volatility. Bit of a perfect storm when it comes to things like the Sharpe ratio. So this year's Sharpe ratio is in the 0.3 percentile. So effectively, it beats 99.7% of all times in market history since, at least in this data, this goes back actually, I think, to 1900. So just astronomical what an outlier this year has been. We're looking at charts here. We can include some of these in the show notes of how many days in the year the VIX is under 12, and we got over 100, actually pushing 200 this year. The days in the VIX under 10, over 45 this year. You can't find anything close to that. Closest is 5 back in 1995, and days under 12, the closest we get is back in 2007 with around 140 odd that year. So just crazy stuff, pretty much however you cut it. Mr. Rock Lobster, what are your thoughts here on just 2017 and what a wild, in many ways, in other ways, not quite wild at all, year it has been?
The single-digit president?
Yeah, imagine if you had said that to me a year ago. That might have been, I might have finally said, that's it, we're done with the Rock Lobster. He's just lost his mind. And yet, here a year later, you would have seemed like the wisest man in the room.
So, historically, it's hard to imagine that this can continue. So, I guess. And we know how expensive buying long-term vol is. It's impossible. So, it's not impossible. It's just really expensive. But this is probably as low as vol is going to get. So just like with clients today, we're looking at longer term vol to buy, which I think makes the most sense, because even if we have more rally, that still can pay. So it's weird because it seems like all the volatility surrounds the president, but in the market, it just does not seem to stay around for very long. So, like you've seen how many market cycles, you trade the market cycle you have, and that currently own gamma and fade the volatility and just watch things play until we actually have something happen again.
Mr. Uncle Mike, same question for you, sir. What are your thoughts on this? Just, pretty much almost by any measure you look at, it's been just a crazy outlier historic year. What are your thoughts here on 2017, the year that wasn't, at least when it came to anything volatility related?
No, I would agree totally. If you'd have told me, I still remember it clear as day on the night of the election with the 100-point move in S&P futures and the 1,000-point move in the Dow futures, and just the client emails I'm getting on my phone watching the election returns, and just magically everything just goes pretty much to the upside. I would not have expected all of this. The other thing that I don't even know how many times I was telling clients, I'm saying I really don't think this vol is going to be at this level forever. So this was definitely a major surprise, and just the thought. I don't know how many times we even said on the show as well, Donald Trump is not a single-digit VIX president. Well, he's, for the most part, a vast majority of his time in office so far, the VIX has been in single digits. So that's definitely been a surprise, to say the least. Now, of course, the good news is, for those of us market bulls, such as myself, this has been a phenomenal year. From the standpoint of a rate of return. Financials have done very well. And this is not something that I think any of us would have expected from a volatility standpoint. The thing that I was really excited about with financials was that we were able to, it wasn't necessarily, and I remember even saying this earlier in the year, it wasn't necessarily a rally based on what's going to happen immediately, at least in the XLF space. It was a rally based upon what it was very much a perception rally, and that Donald Trump is the business president, things are going to be better for financials. And so XLF had a really big year this year. So a lot happened. Definitely not a very common year in that we're constantly at a 9 VIX, but exciting to say the least.
Trump ain't a single-digit VIX president. I think never have more false, less true words ever been uttered on these airwaves, at least so far. So we'll keep an eye on that as we keep an eye on a lot of other things as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Everyone who wants the funky, the weird, the wild options action, lighten it up today. You came to the right place. You came to the Odd Block. Let's kick things off as we like to do. You know, it seems, Mr. Rock Lobster here, it's kind of interesting. We've been talking a lot about these Tesla catastrophe puts. It seems like the narrative, though, may be shifting a little bit, or at least equating to those. We talk all the time, of course, about the Jan 2019 50 puts, but the Jan 2020 puts getting more love these days as well. So perhaps someone discovering those now, deciding, you know, why should I pay a whole 60 cents to go out to Jan 2019 when I could instead spend another $2 to go all the way out to Jan 2020. Yes, there you go. Just a bargain by any stretch of the imagination. And these puts were lighting it up again today. 83 of the Jan 2019 50 puts going on the tape. We're starting to push now, listeners. 36,000 OI. Not quite there yet, but pretty darn close. And also 80 of the Jan 2020 50 puts. Maybe a bit of a calendar going up there. Who knows? Maybe someone is starting to spread off against the massive amount of OI that is sitting on that 2019 50 strike. Either way, both of them doing about 80 contracts today. So coincidence? I leave that to you guys to determine, listeners. Over 4,000 now open on these Jan 2020 50 puts. These things trading a whopping $2.50. Mr. Rock Lobster, you can tell us, you can admit to us if you want that that's you spreading between these two, right?
I'm looking at it, and you look at those puts, and they're going to sit there forever and ever and ever and not move a whole lot, probably for a year, I guess, just because the decay is so low on them. It's just, I guess, and also you look at, and also what's funny is you notice how it's the even handle strike, like the 50 strike, the 100 strike. That 75 strike, not good enough. I need the 100 strike, or I need the 50 strike. It's kind of strange market psychology, I guess. But it's hard. It's hard. Like I said, it's hard to bet against that guy. He can shuck and jive and move and dance as well as anybody. So for right now, Tesla is a $330 stock and has a $100 billion market cap, I think. And no, that's $55 billion market cap. So he seems to keep being able to do it. So it boggles my mind. I found it. I think it's also from an option point of view, it's a difficult product to trade. Because the vol's kind of high for a $330 stock. So just, it's sort of one of those things where you'd like to sell options, but it's Tesla, and so it's a difficult one. I've mostly just stare at it now and not try to get very involved.
Yeah, the vol is crazy. They're pricing in an extra $2 for an extra year's worth of carry on the 50 strike. That's rich. No, however,
not nothing.
However you cut that there. So yeah, they're pricing in some, shall we say, technical term, funky levels here on these 50 puts. You were joking about how rich the 2019 50 puts are, but an extra $2 buys you a whole extra year out here on the 50 handle, because it costs a lot to carry that strike all the way, Mr. Rock Lobster. I don't know if you're familiar with that, but that $50 carrying that a year, that's going to cost you It's going to cost you some cash. All right. We'll keep an eye on these. Write in. Let us know what you think. People are spreading these off, or what you think is going on with these crazy, odd, weird, just nutso puts. Meanwhile, let's keep on rolling. Name we haven't talked about this one in the odd block in certainly quite some time. This is Autodesk, ticker symbol ADSK, closing today at 104.43, off about 60 cents or a little more, about 0.6% or so. This is the name that does about 7,000 contracts a day. Today doing 39, nearly 40,000 contracts today. So a little bit more than average. About 14-1 calls over puts, and that's where our eye of Sauron was drawn. Looks like a bit of a funky verdict. It's not really. I mean, I'm looking here. It could be a roll, but it would be weird also because then it'd be rolling back. You can count on one hand the number of rollbacks we've seen on in the old odd block, but that could indeed be the case. Let's parse it here a little bit. We saw the March 110, April 115 diagonal / roll / call it what you will, going up, starting the day about 14,000 times and change. Paper looks like they were picking up the 110 calls in March for 435, and then looks like they were perhaps dumping the April 115 calls for $3.50, or doing the whole thing for 85 cents. As the day went on, they did a total of about 16,000 and change on the March and about 15,500 on the April. Worth noting, the reason why I say it might be a weird rollback is there's size open interest on the Aprils to the tune of about 16,000 and change, and really nothing open on the Marches. So clearly, it looks like potentially there could be some closing and rolling back. And again, looking at where the strikes are and where the stock is trading right now, it's south of 105. So perhaps they're looking to get a little bit meatier, a little bit more relevant strike on for their, they're not getting a lot of juice. The 115 is trading, like I said, $3.50 right around there. They want a little bit more juice, perhaps a little bit more bang for their buck. Let's look at what's been up here in Autodesk over the past year. It's been an interesting one. It's kind of been a long, slow upside burn here with a few gaps, most noticeably back in May when it gapped from about $93 up to about 114 in the span of a couple of sessions around earnings. So that was a nice little pop there. Started the year, about $75, and it hit its high very recently, right around 130, before getting its wings clipped during earnings back in November, and now kind of flirting around the 104 level. So interesting stuff here, Mr. Rock Lobster. It could be parsed a number of different ways. Either way, it's pretty weird. If you are indeed overwriting on the 115 strike, and then you decide against your strike, usually you might see these guys roll down in the same month, or perhaps even roll out, give themselves a little bit more time. Of course, that costs more money. Instead, if this is indeed a roll, he's rolling backwards, which is odd. Or it could be someone deciding he likes that 115 strike. He wants to pile on a little more with a funky diagonal, which is also weird. Mr. Rock Lobster, when you see this invite to this weird, funky diagonal roll party, what was your thought? Are you gonna go to this thing? You gonna say, I want to check this thing out, or is this one a little bit too weird, too off-putting for your tastes?
We have this conversation many times, and we both agree on the same thing. Why do you take something that you own, that you want to have a position in April, and roll it back for negligible dollars for that position? Let's say you had the 110 trade on, maybe you put it on, you sold them higher, they close them, and now they're selling the April. You're moving into the March 110, for the April 115s, and now you're moving into the March 110s. The only thing I can think of is they want to get closer to the money and kind of jack it up a little bit. It's not that's what it feels like. And I guess, it's one thing I can think of. Maybe they're nervous. I guess if you have 15,000 calls on a strike, you get nervous after a while. And you want to do something. But the only thing I could think of is they went from less volume, or they went from, which is strange, if they had the April on, they go from more volume to less volume. So they're trying to kind of do it dollar neutral, but I don't think it's exactly dollar neutral the way I'm looking at it. But it still feels like they're closing a short, but then selling the March 110s more aggressively. It's just I don't know. It's like you're rolling close. You're rolling in and down. So you're trying to be more aggressive on the premium, but the premium's about the same. So I don't know what they're gaining by getting more aggressive going to March. Sometimes I think we should just call this the confusing block, because you're moving closer but closer to the money for the same premium. Why do it? And that's unless it's around earnings or they screwed up on the April and maybe they want to sell contracts before the earnings cycle. That could be the only thing I really can think about. So usually has something to do with it. So no, both earnings are going to the March or April are going to catch the same cycle. So you got me on this one. This is a total ball of confusion why they would.
That's the fun thing. Fun thing about the odd block. Either way you kind of parse this one, it doesn't really make a heck of a lot of sense. Those are always the fun ones, no matter how you look at it.
15,000 times.
Yes, 15,000 times just to do it. He really liked the apes. Now he decides to lose time and get a little bit closer to the fire, so maybe some bang for his buck there. But you're right, the premium is not exactly that big of a disparity. Did the whole thing for 85 cents. So yeah, the whole thing is a bit of a head scratcher. That's why we like to call it the option block. That's the show. The odd block would be the segment because we get some weird ones. We're gonna put that one in the funky to be watched category, so we can bring it back and hopefully puzzle the rock lobster even more in the future, maybe around March, when we see what's going on with those things. Of course, if this guy's rolling them now, then who knows when he actually might roll those again. Maybe he'll roll to Jan next week, Mr. Rock Lobster, and then we'll have a lot more to parse. Meanwhile, let's move on to the FTC. No, not the FTC you're thinking of. This is First Data Corp, ticker symbol, like I said, FTC, closing today. Excuse me. Uncle Mike's plague still coming through the wires at me. Almost $16.50, $16.42 to be precise, up about $0.25, or about 1.6%. This is the name that does about 1,700 contracts a day. Today, doing about 45,000. Of that 45,000, approximately 38,000 coming in this one. I know you like yourself a good call party, Mr. Rock Lobster, and that seems to be pretty much exactly what we got going on here in good old FTC. Somebody, or everybody, I should say, got to get their hands on these Jan 17s in FTC. This is just where all the action was today. It was lighting it up. Interestingly enough, it was a lot of small blocks of this, and also in some funky sizes, funky prices, I should say. Blocks ranging, most of them, from about 500 to about 1,500 contracts. But obviously, when you're doing nearly 40,000, that's a lot of blocks. And prices ranging from 20 cents, those look really good right now, up to about 45 cents. These things went out 35 at 40. So that 20-cent kind, I think you got like 1,500 at least at that price. So you got a decent amount there. But either way, funky for the size, funky for the weird execution, funky for the pricing as well. You don't usually see this much of a disparity on pricing on these kind of things. Usually it's the bulk of them go up 20, 25 cents, all around that range, something like that. Not in such a big chasm of pricing. All opening as well, only 900 contracts and change open there. So let's pull it up and see what's been happening in our friend FTC over the past year. This thing kicked off the year, right around about $14.50 or so, and then proceeded to kind of rally for most of the year here, as I am suddenly logged out of my system for no apparent reason. So let's just reboot that there really quickly here. And yeah, it has been an interesting year out here in FTC. There it is. All right. With, like I said, starting about $14.50 and then rallying all the way up to about $19 in July. Hit that level again back just a few months ago in October, and then kind of slowly came off to where we are now at around $16.50. So there is perhaps some prior art, Mr. Rock Lobster, for this thing blowing through the 17 strike. Certainly looks like someone wants that to happen, and wants that to happen for a boatload of size here. So when you get this invite in the mail, Mr. Rock Lobster, because you are quite the social butterfly, even all the way up there in Maine, you get invited to all the cool call parties. Will you be attending this one? So, and if so, what do you make of this? Is this a fancy black tie, or is this kind of more low rent, kind of cowboy boot kind of thing?
This is kind of a curious one of somebody coming in and scooping some cheap vol, and FDC hasn't really participated hugely this year in our rally. I mean, it's up a little bit. It was up a lot more earlier in the quarter. It does not look like a crazy play. You know, you're only spending 40 or 20 cents. Obviously, was really good, but you only spend like 40 cents with a month ago. The only thing is they're not buying earnings, so they're buying something. So maybe there could be some tax law help for the company here going into the end of the year. I'm kind of thinking that, but it's a whole big chunk of I want to have the upside. So let's just say it's not an unreasonable purchase, but it's still it's somebody's dang bullish, but they're not getting the earnings cycle out of it. So it smells a little bit like takeover-y talk, or somebody knows something.
It does have a bit of a whiff about it. If they do feel they know something, they're not shy about showing it. They're putting on all the size here in good old FTC. So we're going to file that one in the to be watched category as well. Let's see how this one works. If this person really knows what they think they know, or if they're just wasting a lot of money here on the 17 strike. If that wasn't enough of a call palooza for you listeners to say, I still got a little bit of a hankering for some near-term upside calls, we got you covered. Not quite as near-term as those. These are going to go out a year or so, but still, I got some upside to them. Let's get to Blackstone Group. These is ticker symbol BX. Closing today right around $33, $32.90 to be precise. Up nearly $1 or nearly 3%. Not a bad day here for good old Blackstone. It's the name that does about 14,000 contracts a day. Today doing about 47,000, 15-1 calls over puts. And that's where our eye was drawn yet again. Jan Call Palooza, this time Jan 2019, where we saw someone lighten up the 40 calls, listeners. Yes, 4-0. We saw paper coming in, picking up a big clip of these, over 20,000 in one pretty sizable mega block. Scooping those, looks like for about 78 cents. It is worth noting this is potentially closing, which would also make it weird because these are over a year out, because there is some size on the strike, about 28,000. There's a decent size in Jan across the board here in Blackstone, though, about 20,000 of the 35s, 40,000 of the 30s, and about 13,000 of the 30 puts. So there is some size playing, so it could be someone deciding, you know what, I do like these. It would be weird if this was indeed, if they're buying these and they're closing out a short call to do it a year or so ahead of time, but we've heard weirder things out here. Let's see at the year that's been out here in good old Blackstone. As you might imagine, they were riding some of that early Trump wave pretty much all the way up. Seemed to have peaked back in October right around $35. And ever since then, they've kind of been vacillating. They actually dipped down below 30 briefly back, about a month ago. And now they're kind of hovering right around 33, right in the middle of that range. Today's rally puts them nice in nice green territory again. But they got as low as, about 26 and change right towards the end of last year. So it's been an interesting year for Blackstone. Perhaps not quite as much of a lift as some people had hoped they were going to get with all this interesting stuff afoot in the marketplace. Take us home, Mr. Rock Lobster. Are you feeling close on these? If so, why would you close your covered call with a year to go, sir?
The tax thing. Maybe everybody's like, well, there's a lot of upside. It is a strange close, I have to say. It most likely probably is, but it's one of those where all of a sudden somebody's feeling the animal spirits might be coming back into private equity. So their tax treatment was seems to have did not hit the cutting room floor. So maybe there's a lot of happy going on in private equity land. So all of a sudden maybe writing calls doesn't sound like such a good idea anymore.
Yeah, I guess they decided, we don't need that last year. We harvested after all. Let's just take it off the board now and keep the party going. Speaking of keeping the party going, listeners, we're going to do just that. It's Thursday. I think Uncle Mike has had enough time to recover his voice, so let's dive right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, I got a feeling you're going to be holding court today on the therapeutic benefits of chicken soup and crackers. Am I correct, sir?
I really don't have the appetite for chicken soup, quite honestly. I'm just sticking with crackers at this point, and that kind of has to. I kind of have to force down those crackers. So, just kind of happy with water, to tell you the truth.
I change it then. The therapeutic powers of water, sir.
Got it. Well, it's important to stay liquid. Ha ha. Get it? Anyway, what I want to go through today, a little bit of an update on some of the trading that I'm doing in the leveraged bullish SPY strategy with which we do. A couple weeks ago, I stopped rolling up all of my December calls just because of the fact that it was just getting too close for comfort for me to be in all of these December calls going into the end of the year, going into expiration. So we did kind of a reboot, if you will, and are out in March right now. So current position with which we have at this point for March, and this is all on SPY, we're long the 275 call for March. We got into that, like I said, a few weeks ago. And then we got into that at $1.31 per contract. And for a means of financing it, and this we got into is December 4th is the day we got into it. As a means of financing it, we sold the 252, 248 put spread. We got 50 cents for it, also for March. Now, granted, I'm not a huge fan of selling longer-term put spreads, but this is an example to where I feel you need to kind of play with the cards you're dealt. And we've been dealt a very low volatility marketplace right now, my opinion. I suppose in theory the VIX could go lower, but I'll save that debate for vol views. It could go lower, but in general, from my standpoint, the volatility is pretty darn low right now. So with that being said, I want to benefit from upside, and I want to buy cheap calls. So when we did this, SPY was at roughly 264, 265, somewhere along those lines. And the trade's a little bit profitable right now, nothing huge by any means, because we haven't had that much market movement. But the concept behind this trade is that if we do have a very bullish market between now and March, meaning if SPY goes to 280, 290, somewhere along those lines, then this is going to be a very profitable trade. If we stay around the same area, well, I think I'm out roughly 80 cents. And we'll talk about some things that I'm doing in case we stay neutral here in a moment. And then if we go down, the first point of pain, as I like to put it, is the 252 level. Now, granted, this is expiration day risk, so that means if I were to do nothing until expiration, 252 would be the pain point in SPY. I would likely, if we start to go down to the lower 260s, is when I would look to maybe do some type of a roll with this or some type of protection with this. And I've talked about adjustments of what I'll do with put spreads on the show many times. I'm not going to get too into that today, but if we go down there, I'll definitely keep you guys updated on what I'm doing with this. But the reason that I like this is this does provide a little bit of financing for the out-of-the-money call. Now, with that, I'm still buying an out-of-the-money call for a debit. So in the meantime, a way with which I'm looking to finance this is what I've been doing, and I've talked on the show for probably the last couple of years now, just doing some weekly put spreads at times. And so in the meantime, to finance that 80 cents, I have a lot of confidence that between now and March, I'll be able to finance it with selling some weekly put spreads. Now, let's say this market goes straight up and I don't get any dips to sell any put spreads. Well, I really won't complain if all of a sudden SPY is at 285 or 290 in March, and I'm just helping clients make money on the 275 call, and I had to pay 80 cents for that. That really doesn't bother me that much. If I were to go to a party and say to someone, "Hey, we made a lot of money," and but we had to buy premium on it. We had to do it as by buying out of the money calls in a 9 VIX market. I guarantee you no one's going to laugh at me for something like that. Well, maybe they would if I were going to a party with Andrew and Mark and those guys. They'd probably make fun of me. But in reality, the point is that I like to look at the worst case scenarios of things. And this is a strategy right now that I think can make a lot of sense for you if you're a bull like me and you're prepared to manage risk like me. I think that we're at a time in the marketplace to where not only is it and a lot of times very feasible to do these leveraged risk reversals like I'm talking about, but I'm doing a lot of risk reversals in general with the non-levered money as well. I think it's a good time for it. It's just the bottom line of that if you're buying cheap calls, then it's hard to be wrong when the market goes straight up. So that's my strategy for today. And I guess that, no, I was about to say it would be the last one of the year, but I think we are going to have the show again next week too. So it's not the last one of the year, but stay tuned. Next week, we will have the last one of the year.
Yes, hard to believe. We're already in that territory, but we are approaching. Monday, of course, we'll be off, listeners, but we'll be back on Thursday. So you're not done with us quite yet. And we're not done with you because we still got a little bit of time. So let's bring on some of your questions with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. We got a couple of questions that are just consuming you guys these days. A lot of interest in these. So we'll get into what your responses are. First off, we asked you at the beginning of the week, when do you guys think we'll get them their Bitcoin options that you guys keep asking us about? And we gave you 4 choices, Q1, Q2, Q3, or Q4. And then, excuse me, as a follow-up, yesterday, breaking news in case you missed it, listeners. Of course, we saw the CBOE and CME launch their futures in recent weeks on Bitcoin. ICE deciding, the heck with the futures. Let's make our own ETF. So they announced their own ETF off of those futures, which is, I'm sure, just made everyone at CBOE and CME so happy. And so they announced, it's not live yet, it has to be approved by the SEC, but they did announce this ETF. And so we asked you guys, hey, are you guys, maybe you're interested in the Bitcoin futures, but the word futures is holding you back. You prefer an ETF. Now maybe you got one. What are your thoughts? Are you interested in this new Bitcoin ETF announced just yesterday by our friends over there at ICE? Simple questions there. Yes, no. This is getting crazy, or I prefer the futures. Let's start with you, Mr. Rock Lobster. First off, where are you falling on the great when we will see Bitcoin options debate? And then secondly, what do you think people are responding positively, negatively to this proposed Bitcoin ETF by ICE? Or what are your thoughts there, sir? Uh-oh, he did it.
He's speechless.
He did it. He one more time in 2017, he has forgotten to unmute himself. Mr. Rock Lobster, are you there?
I was 6 months without without self-muting. 6 months. What a maroon. All right. So I'm saying second quarter is when I expect it, although I know they all want it in the first quarter as fast as possible. And then as far as the ETF go, I think the ETF brings it closer to, and I think the futures, you can list options on those. People seem to like ETFs. Wow. You can take your 401k money and buy it, I guess. So I think people are going to like the ETF idea though, because it makes them feel warmer and fuzzier somehow.
It certainly is a bit of a maybe a welcome thing for people who don't like playing in the futures. Mr. Uncle Mike, so you said Q1, or no, did you say Q2, Andrew, for the options? Is that what you said?
I'm thinking Q2, except I think the guys that run the CBOE would like it Q1, January.
They would like it tomorrow if they had their chance. Mr. Uncle Mike, same question for you. Where are you feeling? Have you changed your view on all things when we might see the Bitcoin options? And then also, what do you think our audience is feeling on this proposed Bitcoin ETF? Are they into it? Are they more a fan of the futures? Are they not into it? Or are they thinking this whole thing is getting crazy?
I think that I'm going to stick with Q1. I think I'm optimistic on it. I think they're going to pull out all the stops to make this happen somehow, some way. So maybe I'm a little bit over optimistic on it, but I am predicting that by the end of Q1, we will be talking about Bitcoin options on this show. In terms of the ETF coming out, I think that a lot of our audience is going to like it. Just because of the fact that a lot of people do tend to feel more comfortable with ETFs than they do with futures. Personally, I don't think if I were to delve that much in the Bitcoin underlying world, I would probably feel more comfortable with the futures. But in reality, I really wouldn't feel that comfortable with the futures to begin with. Not saying that they're priced incorrectly or anything like that. I just think it's just too volatile for my taste. What I do think is going to happen, or what I hope happens, is I've heard an advanced technical term from a veteran option trader on this show before about certain volatility ETFs. Predictably crappy. So the fact that I'm looking to do some type of a short with options on Bitcoin when I'm able to do so, if the ETF is predictably crappy because of the roll that exists, if it has the same type of a roll risk that a lot of the other ETFs do that have futures in them, and it makes them predictably crappy, then that's just that much better. So that's kind of where I'm coming from on this.
Well, where our audience is coming from is they're feeling what you're selling here, Uncle Mike. 45% saying Q1, so they're in the optimistic category. I guess if we can get those futures cleared and approved in a span of a couple of weeks, it seemed like, then maybe we can get the options that fast. I'm more at the Rock Lobster and the 26% of our audience who say Q2. I think that's a more reasonable time frame. But still, 71% or so saying it will be sometime by Q2 we will see those options. So everyone's leaning first half of the year. I got to go there. Only 10% Q3, 19% saying Q4. So no love for Q3, and a lot of interest in this Bitcoin ETF thing. You guys are all over the place on this. It looks like it just expired. It was a very brief poll we did on this one. Still got a lot of people pouring into it. And we gave you 4 choices: yes, no. Are you interested? Yes, no. I prefer the futures, or this is getting crazy. 37% saying yes. So interesting. And then a tie for second place between no and this is getting crazy, which I can certainly empathize with the latter there. It is getting a little nuts when we see products that have barely been listed for a week suddenly having ETFs proposed on them. It is a little bit of a rapid product development and launch cycle, shall we say, listeners. Only 3% saying I prefer the futures. So at least according to our audience, 97% not wanting anything to do with the futures or these things. So interesting stuff, but they like the ETF. So maybe the ETF will be where the action is. All right, really quickly. Let's check back in. We'll do that in around the block. Let's instead see if we can get some quick ones here. What do we got? Options, we're exercising. Weirdest thing we've seen in the options market, Michelle. That'll take a long time to answer that. I like this comment from Tom. Let's be honest. If any of us had any size Bitcoin, we would have sold it out ages ago and probably be kicking ourselves right now. I think that's true. I think I can't imagine anyone here on the show would have held it to the ripe levels of 20,000, and then you'd be upset. You dumped it at 10,000, right, Mr. Rocklobster? That's how that works.
Exactly. Although it's funny. A lot of my old kind of colleagues, old trading buddies from the PSE, they have managed to hold on to it for a lot longer than you would think. So I had to say some guys have made some pretty big, no pun intended, some big coin in Bitcoin. I wanted to use that.
You've been waiting all show for that one. You're getting punny in your old age up there, Mr. Rock Lobster. Andy Chen wants to know, will VIX stay under 10 in the next 3 or 7 years? I just love that question because A, it's so random, even though we were talking VIX at the beginning of the show. B, the time frame is just fantastic. 3 or 7 years. He doesn't want to know 4, 5, or 6. He's not interested in that. 3 or 7 is his precise time frame. I guess this alludes to what we were talking about earlier, the number of days VIX has been under 10. But yeah, I'm just going to go out on a limb and say yes, VIX is going to be under 10 for the next 7 years. What do you say to that, Mr. Rock Lobster? Can you imagine that market? What that would be like?
I think the streets would be red.
We'd all be mowing lawns.
I guess, and probably thankful to do it. Although our 401ks would probably be doing really well. So, as far as that goes, I think, again, it's just a prediction, but this is probably, it's hard to get another year of this sort of low vol, because that means just everybody has to do everything right, and it's just hard to believe that can happen. So I'm going to say no. You're going to see higher than 10 vol over the next 3 to 7 years.
Mr. Uncle Mike, last word here, sir. VIX under 10 for the next 3 or 7 years, yay or nay, sir?
I will say nay, but I think it's going to go higher, but we were all wrong when we had this conversation a year ago, so what the heck do we know about VIX?
What the heck do we know indeed, or why he chose that weird time frame? We shall never know. Instead, we'll keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Checking back in really quickly here on our old friend Nike. This does appear to be one of the more tepid. If you sold that $3.50 roughly straddle, you're a happy camper right now. This thing hasn't budged pretty much since we talked about it. So either these quotes are garbage or it has only moved about 13 cents in the after hours, in which case you may indeed be a happy camper on the open tomorrow if you're on the premium selling. If you were loading up, hoping for a home run out there in Nike land, then perhaps that is bad news for you and indeed your portfolio. But we are coming up against it here, heading out into probably the quieter end of a week. And, of course, Monday is a holiday, so there will be no trading. So all the usual caveats apply. Watch out for all sorts of fun decay lurking in there. Probably going to start seeing that coming out pretty soon if we haven't that already. Let's start with you, though, Mr. Uncle Mike. What are you watching for the rest of this week and into the next truncated holiday week, sir?
Well, I don't think there's going to be a ton going on from the major market standpoint, but we might get a little bit of a Santa Claus rally going into the end of the year. The other thing that just catching my eye right now, I'm just looking at Bitcoin futures. It appears that we have, and this is just my quick caveman math on this, it looks like we've had a 17% drop peak to trough since like 7:30 in the morning yesterday. So I'm just going to watch Bitcoin just out of fascination of the whole thing. Once again, I have no position on it at this stage of life, but it looks like it gets kind of volatile during the day. I'm going to continue to watch that. It's fun.
There you go. Nothing makes you feel better when you have the flu like watching massive volatility in Bitcoin. There you go. It's exciting. It soothes. It's like chicken soup for the soul, but nowhere near as nutritious. Mr. Rock Lobster, take us home, sir. What are you watching for the rest of this week and then, of course, next truncated holiday week?
What am I watching? Besides, Bitcoin, I don't even know if there's anything to watch on that, but if we can see that low VIX, if it can close below 9 tomorrow, could be. It seems like they've taken it out a little bit, and 2,700 by the first of the year, because it's just that nice big round number. Other than that, I think you're just going to put this year in the books as a record equity closing. That's what we got.
That's what we got for this show as well, listeners. But as Uncle Mike alluded to, we're not done for the year. No, you're not done with us quite yet. You got to put up with us, easy for me to say, one more time here in 2017. That'll be next Thursday. So we will be off on Monday for the option block. We will be here tomorrow for our usual shows, so you get your nice dose of volatility viewing in the morning and then a little bit of TWIFO in the afternoon. So if you can't get enough of the commodities or you can't get enough volatility, we got you covered tomorrow. Then we're off for Monday, and then we'll be back to wrap up the year with a bow on Thursday and Friday of next week. But before we go, as always, let's start off, see what my cohorts, my partners in crime have cooking. Mr. Uncle Mike, we'll start with you because you're probably on death's door. What do you got cooking for us, sir?
Oh, death's door can't keep me down. I'm too excited for the upcoming year. If you're looking at your commission statements over the course of 2017, as I recommend everybody should do, and you're just so insanely ticked off of paying those enormous ticket charges, give me a call. I might be able to help you in 2018 with a lower ticket charge for your commission, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
There you go, listeners. Hit him up. Take advantage of him now while he's a little loopy. Maybe get even better deals than you usually do. All right, and last but not least, speaking of deals, what deals you got in store for us, sir, over there at the Option Pit, Mr. Rock Lobster, at the year end here?
I was just thinking of a loopy Tosaw. It's kind of funny. Look for announcement for us. There's all kinds of year-end deals on our education products. Look for our new Vol newsletter coming out after the first of the year. So if you want to learn how to trade Vol, it'll be probably the cheapest, easiest, and hopefully most profitable way you can do that. Also some other announcements from our Carmen line, our hedge fund subsidiary. So we got stuff coming, and that's what we got.
There you go. He's got stuff coming, and that's what he's got. Check it out over there at optionpit.com. On behalf of the Rock Lobster and Uncle Mike, I'm sure they all want to wish you a happy holiday season, whatever you guys celebrate out there. I won't have to do it right now because I'll be back tomorrow with some vol views and some TWIFO, so stay tuned for that. And if you're not going to join us for those, for whatever reason, then we'll see you back next Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.